You've got the people who front around this who want to sell. So you're going to see volatility. And I've always reminded you guys in the do not fuck it up mantra, part of that is expect 30, 35% pullbacks. Could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply. People get washed out, leverage is cleared out, and then the real run starts. And the real run is the run to all-time highs and beyond. That usually starts around the halving. So I'm guessing there's maybe a month or two of chop. And chop in crypto markets is like down 30%. It's just sideways chop. So just be careful out there. I could be wrong, could keep sailing higher, but it just feels like it's trading a bit heavy. And even if it does as a spurt higher, I don't think it makes much progress yet. But this ETF, it's going to attract people because the markets have been strong. Last year, crypto, Bitcoin itself was 160%, right? That doesn't go unnoticed, considering even the NASDAQ managed 50%. So it's like 3x the NASDAQ. But let's start with the RIAs, the investment advisors and the financial advisors. Those guys aren't on Twitter. They have no idea what any of this is going on. All the drama that played out and the false tweet and all of that shit, that total goat rodeo, they don't know any of this. The first they will hear about this is when they pick up Barron's on Saturday morning with a cup of coffee. And they'll go, oh, a Bitcoin ETF. And Barron's will probably have some cynicism in the article, let's assume. And they're like, well, that's interesting, but I'm not sure it's for my clients. And they go about their business, and then they go and see Jack, their big client, on the golf course that weekend. And Jack says, hey, what do you think of the Bitcoin ETF? And the RIA will repeat what he read in Barron's and what he saw on Fox News. He's based in, let's call it Cincinnati, Ohio. And Jack will ask him, and he'll feel a little bit silly. And then maybe next week, he starts reading a few more articles and a few more positive things come out. Then he starts thinking, maybe I should do something about this. And a couple of other clients ask him. And eventually he goes and has his steak dinner with his other friend, Mark, who runs the tire franchise in Cincinnati. And Mark's got tons of money and is a bit racy and likes investments like this. And before you know it, he starts building an order book and getting his clients in. He can see they're interested. He's incentivized by the sales process and the commissions. And before you know it, he's mobilized. It's the same with all the RIAs. This takes time. They're not smiling on, oh my God, there's a Bitcoin ETF out. Let's all go. It doesn't work like that. It's a relationship business built over time. And this is, all across the United States. It's not New York City in a dealing room. It's a very different world out there. So that's why it takes time. It's the same with any of the institutions who might be thinking about it. Some fund manager who thinks I can sneak it into my portfolio now and not tell my risk manager that I've got crypto. I'll just sneak it in as an equity and hope they don't find out. Same with hedge funds. So that's all to come. And that's why there tends to be this gap. So that's how I'm thinking about it right now. Also, my view, and I've made this very clear, is Solana's my favorite horse in the race of the big ones. I think the first phase is always Bitcoin outperforming. Next is Ethereum. It's this point in the cycle when the global liquidity turns higher. And when global liquidity turns higher and you've got a catalyst like the ETH ETF, it'll start picking steam. We saw that the last couple of days. It was like, wow, okay, ETH is really trying to outperform. I think it bottomed on the massive ETH wedge chart that I put on Twitter yesterday. And I think it will continue higher over time. And I think ETH massively outperforms Bitcoin for the rest of this cycle. So that's the kind of flow, is Bitcoin, ETH, Solana, with Solana at the top of the pie.
Hey crypto architects, in this video we have Raoul, the former hedge fund manager and founder of Real Vision, well-known and respected figure in the crypto community. He's been bullish on crypto for many years, and he has consistently predicted that the market will continue to grow and mature. In a recent interview, Pal discussed his thoughts on the latest crypto news and Bitcoin ETFs. He said that he is still bullish on the overall crypto market, but he believes that there are some risks that investors should be aware of. One of the biggest risks that Pal sees is the potential for regulation. Governments around the world are still grappling with how to regulate crypto, and there is a risk that they could implement regulations that could stifle innovation. Another risk that Powell sees is the potential for a bear market. He believes that the current bull market is still in its early stages, but he says that it is possible that the market could experience a correction in the near future. Despite these risks, Powell remains bullish on crypto. He believes that the long-term potential of the market is enormous, and he says that investors should continue to allocate a portion of their portfolios to crypto. Powell is also bullish on Bitcoin ETFs. He believes that ETFs will make it easier for institutional investors to access the crypto market, and he says that this could lead to a significant increase in demand for Bitcoin. Thank you, and let's continue our discussion with Raoul.
Again, I could be wrong. You don't need to follow my advice and my weightings and that kind of stuff. And you will find whatever your bag is, and you will be, please don't shill me your bag. I don't really care. And I'm not going to buy it because you're trying to FOMO me into some, $100 million token. It's just not going to happen. So don't do your bag, and why I must look at your particular bag, I don't care. But good luck to you, and hopefully you pick the next 100x. That's not the game I'm trying to play here. Yes, I have a small filthy degen bag on the side, which I won't tell you what's in it, because then I'll be accused of shilling, and Twitter is a gruesome, disgusting place of which everybody will try and lynch me if one of those tokens goes down. So I'm sticking with the big stuff. So that's the crypto idea number one. The other way of looking at it, you may have heard me talk about, is the IPO idea. Yeah, it's nice. It gives us some guidance of how these things trade contextually. But really, this is a trade deal between fiat world and crypto land. And it's a trade deal because the capital that's flowing into crypto land is not permanent residency. These are not migrants. If you remember, population growth, GDP growth is population growth plus productivity growth plus debt growth. This is not population growth coming into crypto land. That has to be new wallets and actual self-custody or on crypto exchanges and all of that stuff. This is a trade deal to allow TradFi Land, our RIA in Cincinnati, to get his clients across into this new world that has higher rates of return. The best example of this I can give you is China entering the WTO. That was a classic example of opening up a market that had much higher rates of return and absorbed huge amounts of capital over time. And I think crypto will absorb huge amounts of capital over time. But remember, these people are tourists. This is not even foreign direct investment, FDI. That would be VC money. What this is speculative hot money flows into this new economy. And one day it'll wash out again too. So be careful of that. While we want to encourage them, while it's going to help our ecosystem grow, while it's going to create more capital, more opportunities, it'll move your bag as well. This is not permanent residency in our world. And so, yes, we welcome them with open arms, but remember, what we really want is a new financial system being built. Now, interestingly, you saw Larry Fink talking today on CNBC, I think it was. Not that I watch CNBC, but there was a clip. And he was talking about, well, this is just the start, because what we actually want to do is tokenize the entire financial industry. And he's dead right. That is the migration of, it's one of the surviving coconut girl doing whatever she does at this time, every time is bark when I'm on one of these. So as firms like BlackRock, Franklin Templeton, Fidelity, these are currently, you think of these as fiat world companies that have set up offices in crypto land, much like many businesses like Apple set up in China. But what Larry's talking about is the migration, the eventual migration of the financial system into crypto land, which was my core thesis when I first found Bitcoin in 2012, and has remained my thesis of where this is all going, amongst many of the other opportunities. So it's really interesting when you think of it in economic terms. These are economies. This is a digital economy of crypto land that has other states within it, Bitcoin, Ethereum, Solana, whatever it may be. So that becomes very interesting. And you can think of, even within that, you've got, interoperable systems, stuff like whether it's Polkadot or Quant or a whole bunch of these things allow, or Chainlink, interoperability. That's the travel, the border crossing from going from one of these nation states to another. We've got immigration, which is us opening wallets. We've got FDI, which is VC. We've got trade deals, which is hot money flows chasing opportunities within a country, which is the ETF.
Thank you for joining us today on this insightful journey into the world of crypto and investing. If you found value in today's discussion and want to stay updated on future crypto news and market insights, don't forget to hit subscribe button below and click the notification bell. By subscribing, you'll be part of our growing community, gaining exclusive access to timely analyses and strategies. I look forward to having you with us in the next video.